doing a video here. I thought I would be doing a video on supply and demand and support and resistance, but instead I'm going to tie it all together and I'm going to do a video on decisions, because that's all supply and demand is, and that's all support and resistance are. It's just decisions made on the value of an asset. So we'll get started. Okay, let's see, we have gold here. Here is what you would call demand. This is a place where there is a big pole up. It's called demand. There are more buyers than there are sellers. Now we know in supply and demand that this here is supply as well. There is a decision to come down. So yes, in this little bar here, price did come down a little bit, but shot up through. So there's a decision that the supply is no good. The price is too cheap. So price shot up, and it had a little bit of an indecision here and shot up again. In here, there will be a flag in the lower time frames, and the flag will have broken down. So price came down here. It stopped a little bit here at this decision and came back up here for a Quasimodo or for a head and shoulders. But inside there, you'll see on this pole and the lower time frames that there is a decision where price is too expensive and it shoots down. Where does it come down to? It comes down to the last decision where price was too cheap. So it comes up again, up to a support resistance flip. Now if you look in the lower time frames there, we'll just have a little look at a support resistance flip. We've got a grey line there at the SR flip as well, and this is basically to the pip. I think the lowest I can go is M15. Right, okay, so there's a big consolidation area here. Price can go back up again. It has nothing really stopping it. But price breaks down, breaks the low here. And it just breaks it and tries to get back up, and it just can't do it. You see this rejection? This rejection gets failed. Tries again, rejects again, but gets failed. I can imagine that in the 1 minute or the 5 minute chart here, there is a big pole coming down right from here to say, no, it's all over. Price is not getting back up in through there. This is already too expensive for this asset, for gold, and price is coming down. So we do have a big bar there anyway. In the lower time frames there will be a beautiful decision made. So when price got back to it, over here, it just came down. Now we'll stay in this time frame for a moment. Price did come down. It had compressed up. Just see the way this demand here had already been touched by this. So the orders were gone there. The buy orders were gone. Here the buy orders were gone. It's compressed all the way down. There is a demand here. But basically this is all compressed down into here where there's an SR flip again. Now we know what an SR flip, in fact this is an RS flip, but it doesn't matter, it's just about decisions. Back to H4, day 1. So there's our SR flip there. Where does price come back down to? It comes back down to here, to another support resistance flip. Right here, because over here there will have been a decision. Let's take this line down and see. Over here we'll look in history and see what's going on. This is an SR flip, as I say. There's resistance there becoming support, but we'll have a look in here, see where the decision is. Price comes down to the base of this pole. Now, there are far more buyers than there are sellers here. There's a massive decision to break up in here into this compression zone and go up even higher through it all. That's demand. Demand is a decision that price is too cheap. That's all demand is. So when price gets back to it, the decision has been made, it's way too cheap, and price comes back up and up and up. So that can be an SR flip if you like, but it's also back here. There was a point where it was way too cheap and price came up. So where did it come up to? It came up to the last place where it was decided to be too expensive. And back down again a little bit to the last place it was decided to be too cheap. Now that last place where it was decided to be too expensive has its sell orders taken already, so price goes up to the last place where it was decided to be too expensive, but the sell orders are taken here already with this spike, so it goes up to the next place where it was decided to be too expensive. What does it do? It bounces down to the last place it was decided to be too cheap. Back up, it's still too expensive. Now it's compressing up, there's no more demand left here. So it's still too expensive, down it comes to an RS flip over here. You'll see in the lower time frames here that there is a decision made to break this supply. This was a place where it was too expensive, certainly price came down from there. But there will have been a decision in the lower time frames to actually break that up. So when it came back down to that decision point, it went up, but it's still in supply here. So it's forced back down again. It touches this demand here where it was decided to be too cheap, but back up it goes to this indecision and comes back down again to where it was decided to be too cheap. Up to an RS flip here. You know that there's going to be a beautiful decision made in here that it was too expensive. Where does it come? It comes down here to this level here where it's still in demand, it's still too cheap. So it comes up, it has a little indecision point here because there will have been a breakdown here on this bar, but it's decided that it's too cheap and up it goes. It actually breaks these highs. On the way up, breaking these highs, it comes back down, touches off this point where it had been decided to be too expensive. So that became supply becoming demand, because the decision was made that it's going to break here. It comes back to that decision point again. It's decided to be too cheap and up it goes. There's an indecision point here and it goes up, an indecision point here and it goes up, an indecision point here and it goes up. There's nothing to the left hand side here. These are historic highs, but it's decided to be too expensive and down it comes. You can already see here with this spike here, the price is weakening, so it's not going to go much higher after that weakening. So it comes up to here, back down. You'll see that there's an indecision point here, price is up and then coming down, but it decides to go up again. There's an RS flip here, there's a decision that it's going to go higher, so when it gets down to that decision point again, it goes higher. Breaks this supply here, up. Flags here, comes down way into this decision to be too expensive or too cheap, breaks that. It's actually engulfed now, so you know the price can go lower now that a whole zone has been engulfed. But on its way it comes back up and has an indecision point here, goes back up that little bit higher. There's a real shakeout, but there's a flag in here, there's an indecision. It can go either way from there, but it comes down, actually breaks this demand area here, so you know it wants to come down. It comes back up again to this point where it had been decided to be too expensive and down, and since we already have this area engulfed by this, it can come down and come down hard. Where does it come down to? It comes down to this area here where it was decided to be too cheap. Just there, pull up, decided to be too cheap, there. Up it comes. Where does it come back to? See this area here? It had been decided to be too cheap here, but price broke down through it. Now, you will see in here, in these little bars, there's an indecision area and a big pole coming down here. But when price gets back up to this area again, this still is a big zone, and it tries to get back down again. It comes back down to around these highs here. In here there will have been the decision at the bottom of this flag to actually go up, so there's a historical level there. If you actually look inside here in the lower time frames, it's where price is now. We'll have a look. So there we have price coming down and getting rejected, and we have an engulf here and back down. So with this being engulfed, price wanted to go up. It comes back down and there's an indecision point here right on top of this. So that is basically an RS flip, but it's actually a decision to break this high. So when price comes back to the point where it's decided to be too cheap, it goes up again. So that's the reason why that turned there. So price compresses its way up here, comes up here to what will be an RS flip here. You can imagine that here is a low, but there's a decision somewhere around here to actually break that low. I won't go into the details. This is your job to actually look into every turning point in history and find out why it happened. But I will guarantee there's a beautiful point in there where it broke the low, came back up again, and when it's decided that it's not going up any higher, a pole came down, and then when price got back to it, it shot down. This whole area was compressed. The price on the way up actually got to this area where it's decided to be too cheap, so those buy orders were gone. So when it hit this RS flip, it was able to come right down here. In here you'll get a beautiful lower time frame decision that price was too cheap. There will be beautiful demand there, and price, having compressed its way down, was able to get itself back up through all this again and to an RS flip here. You can even see inside here where price broke that low, came back up and tried to get in, but it wasn't allowed to get in and came down. So that is an RS flip there, and it brought price back down here. Where did it bring price down to? To a decision point here. This was supply. This was too expensive and price came down, but when price got back to it, it was decided, no, it's too cheap. So it broke up. So price came back down to where it was decided to be too cheap. It's demand, it was supply, it's now demand, it's an RS flip, blah blah blah. It's a decision to actually break this high, and it's too cheap. So price came back up. Where did price come to? It came to the last area where price was decided to be too expensive, and it came down. It broke this demand here, so you know it wants to get lower. It comes back up to the price where it was decided to be too expensive, and comes back down. This had already been taken out, this RSSR, this decision had already been taken out, so it was able to come back down here to this supply turning demand. We know now what that is. Price flagged a little bit and came back up. Where did it come up to? Where it was too expensive. It went down. Where did it go down to? To where it was too cheap. It came up to where it was too expensive. It had now compressed through all of this, so price came down all the way down to here, and you can see that this is an RS flip from over here. In here you are going to see in the lower time frames a beautiful decision to actually break back up. There's a great demand in there. I bet you it's to the pip as well. Price hit it and bounced back up. Now where does it bounce back up to? Well, here was a decision where price was too cheap and price shot up. When price came back to it, it actually broke down through it. So there was a decision right here that it was too expensive still. Price should have bounced from this level back up to here and down again or wherever, but it didn't. Instead, it broke right through, so it's too expensive there. It was decided it's too expensive, so when price came back up, it was still too expensive. The sell orders were there, and price came down to where it was too cheap. Let's get a line on here. So over here we have the decision to break this low here. You can see it, and price had come down lower. It was able to hold price down there again, but eventually price broke this high. There was a decision to break up through all of this. So in the lower time frames, I guarantee you'll still see something beautiful there, some reason why price comes all the way up here. It comes down or comes up to the last place why price was too expensive, and down, where does it come down to? To where it had been decided to be too expensive, but that broke up, and that then became supply become demand. So up it went and up it went. There is an indecision point here where at an RS flip, we know what an RS flip is. We'll carry on. Where did price go to? It went to where price was decided to be too expensive. It came down to the decision to break this supply. Breaking this supply turned it into demand. The decision was there to break the supply. So when price got to that decision, yes, it was too expensive, too cheap, so up it went. Where did it go? It went up to the last place where price had been decided to be too expensive. It came down, it broke this decision point here. This was too cheap, price shot up. But it broke down through that, came back up again. Where did it come up to? The decision to break down through here. Where did it go down to? The decision to come up here. Where did it go up to? The decision to go down there. Where did it go down to? The decision to come up. Where did it come up to? RS flip. Where did it go down to? RS flip. Where did it go up to? Supply. A decision to be too expensive. Where did it come down to? Demand. Where did it go up to? Supply. Where did it come down to? Beautiful demand. Where did it go up to? Beautiful supply. Where did it come down to? Beautiful demand. Where did it go up to? Beautiful supply. Where did it come down to? Beautiful demand. Where did it go up to? RS flip. Where did it come down to? Beautiful demand again. Over here, it's an RS flip actually. Where did it go up to? The decision to break this low. This is an RS flip over here somewhere. Where did it come down to? Still into beautiful demand there. Where did it come up to? Beautiful supply. Where did it go down to? Demand. Where did it come up to? Supply. Where did it go down to? Demand. Where did it come up to? Well, it came up through this compression here. Where was the next place to stop it? Only the last place. It was too expensive. There. Supply. Where did it come down to? Demand. Where did it go up to? Supply. It compressed up into supply, so it's able to come down to where? Demand. Up, RS flip. Down, demand. Up, supply. Down, demand. Really simple. That's all that happens in the market when it's decided the price is too expensive or too cheap. Market orders are left there, pending orders are left there. When price gets back to that level again, it's going to react because the orders are sitting there. I hope this says absolutely everything about supply and demand and support and resistance. All it is decisions on value. Thank you for watching. Bye.